Let me share my screen. Okay. All right, so we'll do a little brief market outlook, starting off with the SPY. Again, in the newsletter, I kind of highlighted that, we did our job of, waiting out this last month, being very patient, kind of avoiding, the choppy action and sitting on the side for the most part. And now that we have started to see this retest of support hold very nicely and bounce right back into resistance, now it's kind of the time that we have to start, getting rid of that, I don't want to say excuse, but that mindset and start to look for new ideas. Of course, saying this on the fourth day up, we want to take this with a grain of salt because it's not like we want to look to buy fifth day up through this high, but now it's looking more so that we're going to be in this range than in beginning of December where everything looked like it was just going to roll over and head lower, where now we're starting to see that, okay, maybe we will stay in this range for the foreseeable future. So again, we're not looking to go crazy Monday morning, especially with this week going into the new year. It's more likely to be a pretty low volume week in general. Most people just kind of taking like an extended vacation. But we want to just get back to that mindset of looking for ideas that the market is starting to hold up in this range versus breaking down. We saw healthcare running back to its prior all-time high, which was pretty surprising. But we can see these different pivot lows again. Not looking to buy healthcare up here, and the reason for that is we saw this with utilities. We saw it retest. We saw it break out to all-time highs. It looks amazing. For looking at it like right now or this part of the chart, it looks great. But it loses momentum and then starts to pull back in. This is often a good time to take some profits, which could be the case if you're in some healthcare names and we push through that high and start to see something similar happen. Again, going into a couple of the past chart talks and some of these calls, we've been talking about how we want to keep an eye on utilities, we want to see them break out. And when they start to fade is when we want to start to look for more opportunities because people are now maybe exiting the risk off sectors, being that utilities. So with that, I'll jump into a couple individual stocks. First up is this box through 27, the more cheaper name, but this is not a name that if it's going to go today through 27, I'm going to be buying it. If it can continue to kind of flag out here and we can find an entry up through 27 versus 26, maybe next week, we'll definitely look to take that. Is KNBE. Another one, again, a lot of these cheaper names up through 24 versus 2150. Again, 10% risk. So we want to keep this on the radar. I'm not going to just blindly buy up through 24. Amazon continuing to flag, on the monthly and the weekly through this 3600 area. This again is not going to be more of a swing. This is a good name, kind of at M1 to just continue to increase that allocation versus trying like perfectly trade it because this is a year-long flag. It's not like it's going to break out and the pattern will run itself out in a couple of days. It probably will take a little bit of time. This Humana HUM, we could see this blue sky breakout forming up through this 470 that's been setting up for better part of a year now, and we can see these higher pivot lows that have been forming, which are obviously good signs for us. So we can continue to limit the risk, with the most recent pivot low versus at 445. A couple others, ANSS. Same thing with this Humana, been setting up for more than a year now. A lot of these software names have been setting up, again, separate from Humana, but a few of the other names are mentioned. Up through this 410 versus 380 for now as this 200 continues to catch up to support area. This Lowe's, another blue sky breakout up through this 59. This is one, again, you probably could sneak in through 58, but this is, one that's been setting up again for many months now that to try to sneak in $1 early, it's probably just going to chop us around more than just simply waiting for the proper breakout level. TBI, another under $30 name in the same kind of base that's been forming, this earnings flag for a few months, a couple of quarters now, up through 28 versus 26. But again, a lot of this similar story with a lot of these names and where the market's at. Fourth day up, fifth day up, not looking to put risk on the fifth day and buy it at the worst possible time. Similar to like kind of these types of entries where it's going to the technical trigger, but it's just too extended and just needs time to set back up. So just keeping a lot of things on the radar. If we can get these tighter entries, maybe it pulls in, holds 27, and we can buy back up through 28 on $1 risk. We'd be much more inclined in that if we're given that. But again, we might be asking for a lot. And then last two, we have this wing stop that's been setting up under this 176, but again, still a bit wide versus 156. So I want to see that tighten up. And lastly, this AON up through this 300 versus 390, which is probably the tightest risk setup among them so far. If this probably doesn't pull out, probably shake this 285 area first, but eventually up through that 300 for that retest, that 326 area could be a nice little sneaky buyback. So again, the main focus this week is, we don't want to rush into any ideas off the bat. We want to start looking, more than we have in the last few weeks, because the market's starting to show us that we probably will trade in this range more so than breaking down and heading much lower, that most of us, myself included, was in the camp that was going to happen. So I'm done with the names that I want to go over. If any of you guys want to jump in and go over a couple ideas, by all means, shout them out and I'll pull them up.
I'll go first. My favorite name is APP up through 95. It reclaimed the short-term MAs. I would like to see like an opening range break up to this level. It came out this downwards channel, so definitely keeping an eye. And another name I have is this RYAN. I like it through 40. Needs more time to tie in.
Yeah, this definitely looks much better than the prior one. Again, the other one looks great. It's just similar to a lot of things I was mentioning, where it's 450 up into that area where it's going to be very hard to expect a lot of continuation, where this one has been trading a little bit more sideways and flagging a little bit better, where you can buy 40 versus 38 and then look to add up to that 41 in time. But definitely a good one right here.
You're right. Another name I'm keeping my eye on is this Bros 55. Keeping my eye around this level. It's a major inflection point. But no trade on it yet. Not looking to rush into it. Needs a bit more time.
Yeah, the 55, 56, yeah. I see what you're looking at. I like it. But yeah, definitely just want to get, that 7% down, what was it? I guess Friday or Thursday. I forget which day we were off, but just want to be aware, especially with these IPOs, like when they have these big days, it's hard to buy it the next day, just given the room you need to give these names. But definitely see what, 55, 56, definitely see what you're looking at there. Definitely makes sense.
Next name I have is this DV. I would like to see a bit more consolidation below 33.
I like it. Again, a lot of things we mentioned before, a lot of these, software, tech names, a lot of, so you're definitely looking in the right area. And this one, again, looks very good. We just want to be aware of, off the 33 versus 30 is 10% risk. So that's just some things we want to just keep aware of when we're getting into some of these more recent IPOs, that the day one risk or the real risk in some of these trades is a little bit wider than, for buying a name like Lowe's that you might be able to get in for a few percent, where some of these recent IPOs are just going to have a little bit of a wider range.
Correct. Next name I have is this Marvel, MRVL. Keeping an eye on 90. And as I said before, I'm not trying to rush into any of these names. I would like to see a bit more consolidation. So next name I have is this D-Dog.
What is it?
D-Dog. DDOG. I like the inside action. I would like to see it, just consolidate a bit more before I buy this up. And the next target for this is 200. So if we could catch it on the way up, I believe it's a good level.
Nice. Any other ones?
Yep. FRHC. I would like to see more consolidation below 70. It's a good level. Then after that, I have a couple more. HRMY. I would like to see it tying up below 44.50. And last one is this wire. It looks like it's coming out of a good run and it's tightening up in this wedge. I would like to see it, tying up before I buy its name up. No real entry on it right now.
A lot of good stuff again, but again, same thing. It's just a lot of these, and it's like the same theme with my names. It's a lot of these. There's a lot more good charts that are setting up, and it's just now waiting for them to kind of have that a couple day pull in, and then be prepared for that next push. And even I don't want to say like particular days, like a specific days matters, but it's like going into the new year. Typically January 1st, or the first day after the new year, is typically a very bullish year. Most people are very excited. They're setting their goals for the year. So you typically see a day like that kicking off the new year. So this week we kind of fade a little bit and kind of pull back in to prepare for that, kickoff of the new year. With a lot of these things that are setting up that are a little bit extended on the short term, if they do get those 2 or 3 days to kind of pull back in, that's when we can kind of find those better spots to get in to be prepared for that, oftentimes of, a very positive first day of the new year, trading wise. So anyone else want to go over any couple names before?
Hey,
before
Ben,
we end
it's
this?
Joe.
Yeah.
Just through your last conversation, you kind of saved me from a mistake. I've been looking at this donut for a while, and I like this level at 17. But your comment about how wide these IPOs are and coming off of big days, my big goal for this year is to really work on my risk management. So definitely this call has helped with keeping that in mind and saying, what, this has got to tighten up a whole lot more.
What's the ticker?
Donut, DNUT, Krispy Kreme. So if you go at 17 and, you would want the stop probably like at 1579 or something like that. So plus the 6% run on it from the other day. It's just, I've got to really start considering stop losses even before, before I think about.
So even like this name, like just overall, it's like we got support at 13. Of course, we're not going to be buying 13. And like 7, kind of 18. And then you have like this like 21 are kind of like the two like real spots where it's going to like have it's like battle with. But we see like a lot of these, 3 days down, kind of rips back up, a few days down, moves back up, 3 days down. So like that's kind of what we want to start to look for, where it's like it pulls in for a couple of days and then we can buy back up, through that, prior high to be involved versus trying to buy it perfectly through the resistance area, which is just often a much harder trade. But of course, again, we're saying that even with the market, it's much easier for us to want to look for opportunities when we're up here than it is to look for opportunities when the market is, at that support level. So that we have to just be aware of. But like what you said with, with this donut, 6% day one, things like that, like, especially in those cheaper names, it's very tough because the $17 stock isn't going to be a $40 stock in a week. It's not going to be a $30 stock in a week. It's going to take a lot of, it takes time for those names to really like get above those price points. And that's a main reason why I avoid, for the most part, a lot of these sub $30 names, because they just don't get as much exposure that the bigger names get. Like, so it's just hard to get the buyers to really push that stock up. But again, there is going to be opportunities there. And those are going to be the names where if you can get, some of these $20 or $30 stocks and can really hold them, those are going to be the ones where you're going to get, the 100 or 200% return very quickly. Buying a box, for it going from 30 to 70 is a much easier trade than, say Amazon going from, 3,000 to 7,000. But we might be able to buy Amazon 5% risk and actually get that move, where box might be 10% risk and realistically we might not be able to hold it for that move because it's going to come back down and probably go to 20 before it goes to 40. So that's kind of just one of those things of why we try to avoid some of the cheaper names and some of the IPOs, just because that the real risk in some of these trades, and not even news related, just how they're going to trade, is just often much wider than we want. Like, we don't really want to be involved in these days, but that's a reality of trading some of these kind of newer issues. But just something to keep, be aware of.
Yeah. Plus, the other thing I was just thinking about, how long, even if you're even close, how long will it take you to get to that 5-to-1 risk to reward risk to reward ratio, you know, you need almost $10 in gains here
Mhm.
to get to that 5-1. So, like I said, it's just something that I've really, you know, taken a look at my results from last year, taking a look at kind of where I want to go. I need to really start tightening up my risk and start paying more attention to that.
Mhm.
I had a decent year, but would have had a really good year if I was able to do that. Keep control of my risk throughout the whole thing.
And that's even like, again, I don't think I've been doing a lot of recaps with anyone on the call, maybe other than Heaven. But for the members that I've been doing the trading recaps with monthly, that's kind of always the primary focus. It's like going through the losers. Okay, you had, 2 or 3 trades where you lost like 5% plus. You had a couple that were 2 or 3% and a few break even. Like, let's continue to, and as you look at them, it's like one of these 5% trades could have been a break even trade or a 1% loss. Next month, let's try to focus more on that. And maybe it was a breakout that day one, we were expecting a breakout and it didn't go and it came right back. Like, that could be the one that, instead of sticking to the game plan to the T, it's showing you immediately it's not working. Just take the ton of your loss. And that's been something with a lot of members that we've done in the trading recaps. It's the main focus has been tightening up those losses. And then when you have those winners, they take care of you much more because you're not trying to battle or dig yourself out of those prior losses. You have less losses to kind of recoup. And that's just been one of the lessons that some of the members I've been doing the calls with have been, focusing on.
100%.
Yeah.
Thank you.
Yeah, of course. All right, guys. Anyone else have any last things you want to go over? All right. I think that's it. All right, guys. If anything anything you see throughout the day, just call it out in the chat. Any questions, let me know. And you guys have a good trading day.
Thanks, you too, Ben. Take care.